Today is June 22nd, 2025. Call it a breakdown continuation structure on a rising wedge collapse of this parallel channel with an additional broken undercut of this concealed hidden uptrend price support level with multiple backtests off that key inflection point and confluence of the 618 resistance level, and it has been off to the races ever since, fueling more backtests amongst some of the key fib levels here, and the 236 fibs has now been taken out with conviction. Off a nice clean divergent high, you had negative and bearish divergences constructed on multiple key technical momentum indicators, where the rising wedge structure snapped, failed with a clean breakdown, and then you had a solidified 240-minute candle close breakdown sell signal below that key inflection point, as well as the golden uptrend concealed trend line. So call it two classic breakdown retest scenarios here, and we are now sitting and trading upon an inflection point where bulls must defend or risk cascading lower below this key lower fib level. Call it the 99,509 level, the 786 fib price support. If taken out with conviction here with a solidified solid breakdown candle close below that 4-hour structure, I believe would only gear in and increase the odds on a great short test down to the 94,216 level, setting some stops up above the 101,250 / the 236 101,592 level. The 236 fib levels setting some stops. Bulls, long traders, they want a complete validation on a retest, defending these key levels, setting some stops below to re-challenge the 236 fib mark, only increasing the odds on a puncture breakout structure, ultimately trapping shorts here. That would be the bullish near-term scenario, although catching a fallen knife probability trade, call it an aggressive and risky falling knife pivot point tactical bounce play. But again, make no mistake about it, the ball is in favor of the bears here. On a solidified 4-hour candle close breakdown structure below would usher in a measured target for a 5.4% crash to the downside, down to the 94,500 level for a 9.3% crash, down to 86,781 for an additional, call it a 13% crash, and gains to the downside. Momentum indicators stuck on around the 29 handle, officially definitely oversold conditions here. No bullish divergences yet, and momentum remains heavy to the downside here, with the histogram only increasing here on the moving average convergence. Big, solid, validated red candle closes below that threshold. You have the stochastics 1033 custom indicator potentially forming a double bottom here. But make no mistake, momentum is strongly bearish, but reacting at these exhaustion levels, where a relief bounce, again, a relief catching a falling knife bounce is possible at or slightly below this fib level. Bitcoin has entered a decisive post-wedge correction phase where the rising structure has been broken. Momentum is strongly bearish, and price is now retesting at the edge of the cliff of the 99K handle. Should this level give way, the next targets where bears are now in full control, where bulls could stage a short-lived counterattack from oversold territory, where the technicians and the technical traders will be watching 99.5K like a hawk, and a line that separates a healthy pullback from a full structural collapse. You out to the daily interval, and I have reiterated in my previous videos how detrimental the 100 exponential moving average has been throughout this entire span of time, and we are recollecting and retesting that big key moving average inflection point. Once again, if taken out, would only solidify an additional strong sell signal close below. Long traders, bull traders must defend this key inflection point really at all costs to avert further damage that will be ultimately intertwined into these technical indicators, overshooting and undercutting its zero line threshold, infusing damage into these key technical momentum indicators.